All right, what's up, Tycoon? Super excited for today's video. We are going to be breaking down Li Auto, okay, ticker symbol LI. This was a viewer request, all right? So if you have any requests, let me know in the comments below, and I'll be happy to chart it up for you, give you my technical analysis and opinion as soon as possible, all right? So let's go ahead and jump straight into it. And wow, guys, look at this. 145% the stock has ran up in the past about 96, 99, 100 days, okay? Amazing rally. Why is it happening, right? That's the number one question a lot of people may be asking right now. And if they're not, that's the question you should be asking. Okay. Don't jump blindly into these stocks and trades. Oh, well, something's going up. I need to buy into it because it's going up, right? That's not the way you want to go. That's a good way to lose a lot of your money. Now, what we can understand is that markets, all right, are rotating into Chinese stocks. All right. So we're looking at Li right now. This is a Chinese EV company. Let's go to Baba. All right. Let's go ahead and look at ticker symbol Baba. This is Alibaba, another very popular Chinese stock, up 60% in the past 98 days. All right. Let's look at NEO. All right. NEO, amazing. Okay. Up 105% in the past 42 days. Why is this happening? Okay. Yeah. NEO has had a lot of catalysts. Okay. They had their, car event showcasing a new vehicle, things like that. But overall, the big trend is money is pouring into Chinese stocks. Why? Well, the reasoning why is because there's a bailout going on, okay? And they're in rumors to bail out the Chinese economy, and the banks there's going to be a bank bailout, right? As the rumors going around along right now. And what this means is kind of think of like the trillions of dollars that we printed during COVID combined with the government stimulus in like the 2008 market crash. Combine both of those together, and that's what China is about to get pumped into their economy currently. All right. So it's a huge upside potential. And the reason that markets are rotating into that is because the S&P 500 and the NASDAQ have officially crossed bear market territory. Okay. And some of the reasons for that have been, all right, the crazy inflation. Okay. Then we have the Fed interest rates keep on rising. Okay. And hey, they say, hey, 50 points is aggressive, we're not going to go above that. Then they go to 75, and now they're saying they're not going to do 75 again. But who knows what inflation is good, what the inflation reports are going to come out as. And they may do 75 again, or they may increase all the way to 100. So there's a lot of fear and FUD in US stocks particularly. And so with this news that potentially there's going to be a bailout in China, right? The markets are flooding into that because now this looks like a good opportunity. Okay, so that's the first thing you have to understand. And once you understand that, okay, the current trend is a market rotation into Chinese stocks, you can ride that trend and keep an eye on it until the trend is over. All right. What I'm going to do is I'm going to show you guys some great places, to pay attention to on the chart. We're looking at the daily chart right now, and this is our supply zone. Okay, this is where if you're in Li and we continue this upward momentum, you really need to think about taking profits between 43 and 47.7. Reason being, that's our all-time highs right here. Okay, and we have a large supply zone. Okay, we can see that once we enter these levels, okay, and we closed here on this day on November 23rd, all of this area right here, there was a supply imbalance. What does that mean? There's an overflow, there's an imbalance of sell orders in this range, right? You got to ask yourself, are we in current market conditions to create a demand imbalance? Okay, and for buyers to step in and create a demand imbalance over the current supply imbalance in this area? We may be, right? If that Chinese, news keeps continuing and more bullish news comes out and things look bullish. But for now, this is a big area where I think that Li, if this uptrend continues, this is an area where we're going to fall and find some resistance. Okay. So, highlight that area on your own chart and just be prepared to take some profits if you're currently riding this amazing uptrend. All right. Now on the downside, okay, because there's lots and lots of money to be made either going up or down on Li currently. Okay. You don't have to fight the trend. It's an amazing uptrend. We may have a small pullback. Okay. As you can see here on the chart, I noted that this is our supply zone. Okay. And our area where there's a sell order imbalance of supply, right? But we need to pay attention for these 5 daily gaps down. Okay, we have one very big gap down, a smaller one, and 2 medium-sized ones, and a third, I'm sorry, a fifth, a little bit larger one. Okay, let's just call that a nice medium-sized gap. The reason we pay attention to these is because they fill 90 to 95% of the time historically. Okay, we'll go ahead and remove this trend line. Okay, and you guys can see here that on this day there was a huge gap in the stock market. Okay, for Lee. Okay, we had these highs here, and then we gapped up all the way up to here. Well, eventually over time, okay, as you can see, this was in March, and then this is April over here. We came back down and filled that gap. All right, so that's most likely what's going to happen on Lee in the future. All right, we do have 3 reversal candlesticks in a row, but we haven't reversed, right? So we could pull back and probably fill this gap and look to find some support along here. But there's nothing saying that we're going to stop the uptrend, right? So you don't have to fight the trend. What you can do is look for an area of re-entry and ride it up into the supply zone and take your profits there. Okay. We're going to go ahead and throw on the fibs now. All right. And this is going to give us some areas and price targets, right, to start taking profit. We'll take our swing high and swing low right here. Okay. And we'll take our swing high and swing low down here. All right. Now, what I want to show you is that our blue line is basically going to be our breakout level. Okay. And then our green lines are going to be TPs. Okay. Take profit levels. All right. And you can see when we zoom in a little bit closer on the chart, that a lot of these areas are being well respected. Okay, here's our breakout level. It was a very large resistance level. We kind of consolidated around this area before we got the true breakout. Okay, we faced some resistance at this other larger breakout level before ultimately coming up, hitting our first bullish take profit zone. Right, we found some resistance there. You see people taking profit, it pulls back. All right, we find support just above the gap and continue the rally up, hit our next take profit levels. Okay, continue that uptrend, gap up even more. And where do we find resistance at again? It's at our Fibonacci price target levels. Okay, so what we're going to do is zoom up some more. And if you look, we actually have the 261.8% level on our fibs right up here around that 47.7 resistance level near our all-time highs. Okay, so that's our next bullish price target. Okay, so keeping that in mind and knowing that this is an area where there's a supply imbalance, it's very possible, okay, that as soon as we break this 41.24 level and that becomes a valid support level, that we're going to see sellers start to step in the market, and it's going to take a large amount of volume and a large amount of buyers to increase and push this area, change it from a supply zone where there's a supply imbalance to a demand imbalance. And what's going to happen there? It's going to skyrocket the price even higher. Okay. So those are all of the main things that I'm looking at. All right. If you do want to short this, right, what you can do is you can wait for it to come up to be about 44 to 48 in that price range and grab a put contract with at least 6 months out in time. Okay. And look to play one of these following gaps down. All right. You can't forget that the overall stock market as a whole is in a bear market. Okay. During a bear market, what tends to happen is you start to see, you see about 60% of the largest rallies in the stock market historically have occurred during a bear market. And why does this happen? They're trying to trick investors, and smart money, institutional hedge fund money, is trying to draw new investors back in. Okay. And like, hey, we bottomed. Look, everything just went up 150% in the past 90 days. We already hit bottomed. You got to get back in. And then once you get back in, you see new data come out, new news, whatever the reason is, whatever market makers want, they drop the prices back lower. Right. So you have to keep overall market context in mind. This uptrend won't continue forever, but for the moment, for the time being, you can continue to ride that uptrend. Okay. So our immediate resistance level is going to be at 41.24. Look for that to be an area where we could be dropping. Okay. As soon as we flip that from resistance to support, we're going to head up here to this $44 to $48 range, as I explained. And that is our major supply imbalance. Okay. So that is where the rally may come to a halt. Where definitely I would recommend taking profits if you have not already. All right. So thank you guys for watching. Don't forget to like, comment, subscribe. And as I mentioned, I do those viewer requests every single week. So if you want to see your stock in the next video, make sure to comment below.